Tahoe City, California. Hey, Matt, how are you?
I'm doing well. Thanks for taking my call, Dave.
My pleasure, sir. How can I help today?
My question for today is I'm curious if I should set up a separate company or an LLC to lease equipment and vehicles back to my various businesses that I own.
It doesn't serve any purpose except risk management. There's no tax advantage to it. Why would you do this?
My thought is some of the businesses that I own a primary underground utility contracting business, which is my main bread and butter. In addition to that, I also have several properties that mainly they're just rental properties that I need to do some overall, what's called general improvements to. And so my thought is I can rent equipment for that particular LLC and spend a lot of money on that, which I will not recoup. Or I could purchase it and then use those same pieces of equipment, basically lease them for those particular projects, and then use them on the other businesses without, just as a way to kind of keep things straight. And then also, as you lease those pieces of equipment, that allows to pay those pieces of equipment off. It's also creates funds then for purchasing other equipment down the road.
There's no magic money being created here, man. You realize that. It's your money. You're just swapping pockets with it.
Okay.
It didn't create money by doing this. I mean, okay, you're going to go buy. Give me an example of one of the pieces of equipment. What is it?
Like an excavator, like a mini excavator.
Okay, what's that cost?
$50,000.
Okay, you go spend $50,000, write a check, and you buy an excavator. Okay, and then if you want to give the $50,000 back to yourself from one of your other entities, you're just moving money around. It's still the same $50,000 excavator, and you still own it. So if you just bought it and then depreciate it, write it off like you would a normal piece of equipment in a normal business, and then you use it for whatever you need to use it for in business. But it's not, or it may be, depending on what it is, you may be able to expense it in 179. I don't know. You have to talk to your tax accountant about that. But it's not, paying your self-payment from a payment to lease back equipment that you already bought from yourself is just swapping pockets. You're just moving from the front pocket to the back pocket to the front pocket. You're just moving it around. It didn't create any money.
Okay.
If you reached it to somebody else, it would create money. But I'm not going to recommend you go into the equipment leasing business. I think you got enough businesses running.
Okay. Same thing with vehicles then as well? So
exactly, same thing. Yeah.
Okay. Gotcha.
Yeah, it's because it doesn't create money. I mean, now if you're going to buy a piece of equipment and you're worried that someone would get hurt on it and sue you and you might lose something, then that's fine. Put that in an LLC from a risk management perspective, and then make sure you've got good insurance on it as well. In that regard, I don't own anything anymore. I'm rather poor personally. I don't have a single thing I own, Mike. I don't own cars. I don't own anything. Everything is in an LLC or a sub-S corp or a trust of some kind. Something else owns everything. And so then, like for instance, the pieces of real estate that you mentioned, okay? We'll put about $10 million worth of real estate in a single LLC, and after that, that's too big a target. After that, I don't want $20 million in there unless it's got some other kind of structure to it, because if somebody falls and breaks their face getting drunk off the back porch and then decides it's my fault and sues the owner of that property for liability because they had a back porch, then welcome to America, right? And then they can only get, if they won, the things that LLC owns, because that property is not owned by Dave Ramsey. It's owned by such and such LLC. You follow me?
Yeah, and so I think that was the second part of it, is just separating out some of the liability.
Yeah, that's risk management, and that I wouldn't mind if you want to do that. Like all my cars are in an LLC. All of my vehicles are in a separate LLC. So if there's a car wreck, the LLC's got a problem. It's got insurance. We got normal insurance, but if some goober happened to get some kind of wrongful death thing or something, he's going to get a bunch of cars. That's it. because that's not, the LLC, the owner of that car is not me. You follow me?
Right.
So that's risk management, but it doesn't create any cash by doing that, by you paying yourself rent for something. It'd be like you buying a building and paying yourself rent. You know, you already own the building, but you can pay yourself rent. I pay myself rent here because it's a separate entity that owns the building, but it doesn't create income for the entity that's involved. It's all, I mean, for the overarching thing called Dave Ramsey, I own all of it ultimately, and I'd be swapping pockets, and that's all you're going to be doing with that. So yeah, there's no magic pill to this stuff, man. Go make a bunch of money. Go do business well. Go help people. Those kinds of things are where your money comes from, not from gyrations with purchased equipment. And you may not need to be buying this piece of equipment, by the way, because I think you said something about you were going to borrow on it. I didn't smack you for that, but I could later. This is the EntreLeadership Podcast.